Welcome to Midweek Madness by Roots Research. My name is Patrick. So this week has been pretty crazy. Russia is unofficially invading the Ukraine under the guise that they're helping rebels, which is, I think everybody knows, a load of crap. They're supporting rebel groups in Donetsk and other places. Really, it's just to shore up their borders. And they're going to continue doing that. The US, the UK, the EU, along with many others, have denounced them or committed sanctions. Some of the most interesting outcries were from their own partners, like Turkey and China. However, I'm not sure how much will actually come of it, unfortunately. Much like Crimea. They basically annexed an entire area of Ukraine before this. And they were already building their case about how the Ukraine never really existed and it was always part of Russia anyway. And it's just a modern kind of creation. But we all know what the real reason is. And that's because they want more control and more power and more access to resources, yada yada. The S&P is officially in correction territory, and obviously the Ukraine-Russian crisis has a lot to do with that. But along with that, tech has taken an absolute beating, and a lot of them are down 50%, 70%. Those big tech names that you saw last year, a lot of biotech even. Tesla's been doing okay, as it does. It's still in the 800s. It's down, I think, about 20% from its all-time high. So not too bad there. But much of them have taken just a real dive. And I think some of them certainly are unwarranted. Everybody's afraid about the Fed raising interest rates, but some of them have cash on hand. Some of them really aren't as affected by it. And ultimately, over years, it's not going to matter that much. So really, what I'm looking at is what are the good places to buy? And right now I see biotech, tech, many other beaten down stocks as great value. A lot of them, I know some are falling below their IPO, DPO price, and they still have shown a lot of growth in the last year or 2 years, however long it's been since their IPO, DPO, and there's no real logical reason for that except for just the emotional reason of fear. And with that, I think this is a great opportunity to be on the buying side, where everybody is hedging and getting insurance with puts and short selling. I think the time to get insurance to hedge is at the top before everything goes to shit, right? You don't want to buy insurance while your house is on fire because, well, no one's going to sell it to you, and if they do, it's going to be really expensive. And so right now is not really the best time, I think, to be short. It would have been 2 months ago. In hindsight's 2020, but what we can do now is look where the market's going to go, and I think 2-3 weeks out, maybe a month, until the first federal interest rate actually rises, we may see some more downside. It's possible. But a year from now, 2 years from now, 6 months from now, I think, this isn't the end. And I'm still bullish. I'm still looking for good buys, have a longer term outline. I think it's still a good market if you want to day trade. There's a lot of opportunities up and down. So, it's all about dealing with the cards that you're dealt. If you wanted me to talk about something today, but I didn't, let me know in the comments below. Check out the description for more great content and content providers. Join our Discord, and I can even tell you which tech stocks I'm talking about. Ask me questions, learn more about the markets and how we trade, and how to stay afloat in a choppy market. Like and subscribe, and I'll see you next time for another great Roots recap.